Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is 29th of July 2024 and it is a weekly markets update. Let's have a look at the news of week 30 and see what are the next trends. Urea market is rather quiet, with only one large consumer market, Latin America, being comparatively active. Brazil's CFR level of $360 that was holding for several weeks began to soften, and bids for purchase are circulating already in 350s range. Lack of demand from other markets for August might give the buyers opportunity to purchase at such level. The August imports lineup for Brazil includes more than 600,000 tons for now. There were a couple of purchases concluded last week, specifically 30,000 tons of granular from Mexico, most likely Russian tons, 30 to 35,000 tons of granular to Peru, from Baltics as well. Also in coffee closed a combined tender for granular, Prills urea and ammonium nitrate for mid to end August shipment to various Pacific ports, total about 30 to 35,000 tons of urea. European markets are mostly off-season, so Egyptian producers were not able to support desired price level of $365 to $70 FOB. For now, Egyptian production is operating steadily at around 80% capacity. Egyptian government issued a tender for another 5 vessels of LNG to arrive in September. However, with recent shelling of northern Israel, military actions against Hezbollah in Lebanon seems to be inevitable, and thus potential Israeli gas exports cut is in the air. In the Black Sea, the Turkmen and Azeri products were sold at the level of 320 FOB, which currently works for the level of Brazil CFR, but was rejected by Turkish buyers who have better options of Iranian material. In Iran, producers were actively proposing volumes for exports, but sales tenders were mostly scrapped due to low price proposals received. In total, producers proposed almost 200,000 tons of granular and Prills product. Only 30,000 tons of granular is understood to be sold at the level of high 290s, while 25,000 of Prills were reported to be sold at $320 FOB. All the rest didn't find any interested buyers. Ethiopian tender that was supposed to close on July 26 didn't result in any awards yet. Let's watch it this week. Demand in African countries starts to pick up, but activity will emerge in August. In Asia, the activity is subdued. However, sales of Prills urea from Indonesian producer marked as high level as $370 FOB for small 5,000 lot. Significant premium of Prills versus granular is the result of Chinese volumes being out of the international market for a long time. In the US, August barges values increased by $5 to $310, $312 FOB. However, the price level is still not attractive for international traders, thus the supply remains scarce. Paper values didn't change much, with some downward correction for Egypt FOB for September to the level of $340, $55 FOB, minus $8 versus a week ago. Null FOB value for August corrected downward by $4 to the level of $305, $317 FOB, and picked up a bit for September to the level of $315, $20 FOB. Arab Gulf FOB values corrected marginally downwards by $2 to the level of $337.48 for both August and September. Brazil CFR level hasn't changed, stays at the level of 355 to 65 both for August and September. The uncertainty in the market due to the rumors of the next Indian tender to be announced in August drives future prices movement in different directions. Ammonium sulfate market values are stable to softening due to slow demand in the last weeks. In the Pukpuk tender, the buyer received offers for standard of SUL at China FOB plus premium of about $15, with shipment through September-December. Now the buyer is expected to issue counters. Most likely shipment will be split between several suppliers. In China, standard of SUL prices slightly decreased to $135–40 FOB level. Compacted and granular product price level is stable, with Brazil remaining the key outlet. At least 5,000 to 6,000 tons were sold this week at $155–60 FOB China. Nitrates and UAN markets are still very quiet in all geographies due to seasonal factor. The only major happening was in coffee purchase tender, in which 15,000 tons of ammonium nitrate was booked. The product is understood to be from the US, while Russian producers were not attracted by the price level of 290s CFR. Ammonia market sentiment is different for Tampa in Europe and regions east of Suez. In Tampa, Yara settled its new contract price with Mosaic for August at $475 CFR, $60 higher versus a month ago. The significant hike is driven by low inventories in the Caribbean and unplanned capacity curtailments in Algeria and Egypt that have triggered higher prices in Europe. At the same time, there is some immediate demand in different European markets, which is difficult to cover. Thus, the price is increased by $15 to the level of $495–530 CFR. Gas supply curtailment in Trinidad continues, increasing pressure at the market west of Suez. In the Middle East, prices are indicated at $350 to $65 FOB, with healthy supply-demand balance, and no major deals conducted. In the US, most of the producers are committed for August, so contract price increase was logical. Phosphate market is bullish for a second month in a row. Demand from European countries remains very limited due to harvesting campaign, and future purchases are on hold now. OCP reported 70,000 tons of DAP sales last week to different European countries at the level between $595 to $620 FOB, mostly for August-September loading. It is $5 higher versus prices of a week ago. Also, OCP sold 19,000 tons of MAP to Latin America, excluding Brazil, at $605–10 FOB for August loading. Another 7,000 tons of MAP OCP sold to Europe at $610 FOB for August-September loading. About 10,000 tons of TSP was also sold by OCP to Western Europe at $475–95 FOB price level. In India, the government has kept the budget for phosphate and potash fertilizers under the nutrient-based subsidies scheme broadly steady compared to the budget of a year ago. The current DAP subsidy gives a break-even price of imported DAP at the level of $506 to $7 CFR, which obviously is far from realistic market values. There have been reports that government is considering additional DAP subsidy that would allow domestic DAP producers use imported phosphoric acid and ammonia and produce with margin. But importers still will not be able to make money. However, India cannot rely on domestic supply only. Lack of imports caused domestic stock fall in June by over 400,000 tons. The situation endangers supply for Kharif season more and more. Chinese DAP prices for export shipments increased by average $5 last week to $580–90 FOB. But most producers have halted export offers due to lack of clarity with the situation in India. Paris and Bangladesh tender that was finalized a week ago delay LC issuance, so some Chinese suppliers are rumored to divert initially planned shipments in August to other markets. Key news in potash segment is that Israeli ICL has signed a deal to supply standard MLP to China after Alkali, at the contract price of $273 CFR. ICL will supply 840,000 tons this year. Perhaps other suppliers will use this price indication to sell to China further in the year. Moving to the fundamentals. European natural gas price rose by nominal 1% to 32.6 euros per megawatt hour, indicating a fragile market balance despite weak demand. Initially relaxed about supply risks, traders are now concerned due to unplanned outages, warmer weather, and stronger global competition for cargoes. A recent bullish factor is an outage at Australia's Suez LNG export plant, which risks tightening global supplies despite rebounding flows from Norway and resumed exports from a key US LNG plant after Hurricane Barry. Meanwhile, demand remains weak for now, with Italy's Eni SPA reporting a 16% drop in Q2 consumption, partly due to decreased industrial activity. US natural gas futures declined again toward $2 per MMBtu after the US Energy Information Administration reported a larger than expected storage build. US utilities added 22 billion cubic feet of gas into storage last week, surpassing market expectations of a 15 billion increase. Gas storage levels are now 16% above the 5-year average. Natural gas prices are set for a second week of losses due to rising output, driven by high prices in April and May, which pushed producers to drill more. However, extreme heat expected in August should increase gas consumption for electricity generation to power air conditioners. Agricultural commodities continue downward correction. Wheat prices fell another 3.5% to $5.2 per bushel, following the USDA's report indicating that the US winter wheat harvest is 71% complete, far exceeding the 5-year average. This level is the lowest since the beginning of this year and was last seen back in September 2020. Improved weather conditions in Russia have also enhanced the wheat outlook, with the crop forecast increasing to 83.2 million tons. In response to lower prices, Egypt made its largest wheat purchase in 2 years, acquiring 770,000 tons, mostly from Russia, marking the biggest deal since June 2022. Corn futures just marginally increased to $4.1 per bushel, but still remain on the lowest level since November 2020. Projections of substantial increases in global corn production, particularly from Brazil, have bolstered the supply outlook. Additionally, favorable rainfall has aided crop development, with reports indicating that 67% of the US corn crop is rated as good to excellent, leading to the accumulation of record high corn stocks not seen since 1988. Meanwhile, demand remains slow, as sluggish export sales and US shipments trail behind Brazilian competition, intensify downward pressure on prices. Economic uncertainties and projected declines in farm income increase bearish positions in the futures market. Soybean prices hit another lowest level this week at $10.7 per bushel. The anticipated large global production for 2024-2025 season is contributing to the price decline, with Brazil expected to produce an exceptionally large crop that will further increase global supply. Additionally, improved weather conditions in the US are also benefiting crop yields. Meanwhile, recent USDA export data shows that sales are below the typical pace this year, with new crop sales at a 20-year low. Moving to the shipping industry. Containerized freight index again showed about 3% decrease last week. Market analysts forecast that the spot peak has already been achieved, and further in the year, values will slightly drop. However, Suez Canal prolonged closure, compounded by port congestions in China and other regions, and cautious shippers' behavior don't support significant cost decrease. So, fundamentals unchanged index level will be high versus averages from last year's. The Baltic Exchange Rate Index also lost 3% week on week, mostly due to declining Capesize segment. Capesize index fell 82 points to its lowest level since May. It is driven by oversupply in tonnage in ballast and weakening demand. Panamax market experienced mixed activity levels with a general sense of cautious optimism. Situation in Supramax is steady, as well as in Handysize segment. To sum up, situation in the urea market is rather stable, with limited demand in key markets, which keeps prices from moving either direction. Egyptian production is operating steadily at 80% capacity, but gas imports from Israel are under constant uncertainty, which might bring more surprises to the industry in August. Ammonia segment continues to be bullish. New price for August set by Yara and Mosaic at Tampa at $60 higher versus a month ago. Phosphate segment also continues to be rather bullish. However, main uncertainty, India, is ongoing. The new budget for subsidies stayed at the last year's level, meaning that DAP importers will lose about $70 to $80 per ton if importing product now. MAP demand in Brazil is almost finished, and low crop prices don't support purchases for corn season, at least now. Agricultural commodities continue downward correction, staying at the lowest level since October-November 2020. Of course, it adds bearish sentiment to the farmer's ability to purchase in autumn. So, let's see what is next around the corner. But it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon!